This is where big money is moving in crypto. Right now, something big is happening in crypto. Not on Twitter. Not in meme coins. Not in hype charts. Quietly, smart money is moving. Institutions. Funds. Whales. They're not chasing pumps. They're positioning early. And by the time the headlines catch up, the biggest gains are already gone. In this video, I'll show you where big money is moving in crypto, why they're moving there, and how retail investors usually miss it. This isn't hype. This is positioning. Let's begin. What big money actually means. Before we go further, we need clarity. Big money doesn't mean influencers. It doesn't mean YouTubers. It doesn't mean anonymous wallets gambling on memes. Big money means hedge funds, asset managers, venture capital, institutions, corporate treasuries, long-term whales. These players move slow, quiet, and early. They don't chase trends. They create them. And most importantly, they buy before retail understands the narrative. How big money moves differently. Retail investors ask, what's pumping right now? Big money asks, what will matter in 2 to 5 years? Retail looks for green candles. Big money looks for infrastructure. Retail buys stories. Big money buys systems. That difference explains everything you're about to hear. The first major area, tokenized real-world assets, RWAs. This is where the smartest capital is paying attention first. Tokenized real-world assets, also called RWAs. This includes tokenized bonds, tokenized real estate, tokenized commodities, tokenized treasuries, tokenized private credit. Why does this matter? Because trillions of dollars exist outside crypto. And big money doesn't want crypto replacing the system. They want crypto upgrading the system. Why RWAs are so important? Because traditional finance is slow. Settlements take days. Transfers are expensive. Access is limited. Blockchain fixes that. Now institutions can move assets 24/7, settle instantly, reduce costs, increase transparency. BlackRock knows this. JP Morgan knows this. Goldman Sachs knows this. That's why they're already here. What big money is actually doing? They are not speculating. They are building rails. They're tokenizing US treasuries, money market funds, corporate debt, because once assets are on-chain, they never leave. This is one of the biggest shifts in financial history. And most people aren't watching. Infrastructure over hype. Here's a rule you should remember. Big money never buys the shiny app first. They buy the infrastructure underneath it. This leads us to the second major area. Blockchain infrastructure and scaling infrastructure is boring. That's exactly why big money loves it. This includes Layer 1 blockchains, Layer 2 scaling solutions, rollups, modular blockchains, data availability layers. These aren't flashy. But nothing works without them. Why scaling matters to institutions? Institutions care about speed, reliability, cost, security. They cannot operate on congested networks. They need blockchains that feel like AWS, Visa, Nasdaq. Fast. Stable. Always on. That's why scaling solutions are attracting capital. Not tweets. Not memes. Capital. The quiet rise of Layer 2's. Layer 2s are where much of the activity is happening. Why? Because they make blockchains usable. Lower fees. Faster transactions. Better user experience. Institutions don't want to pay $40 per transaction. They want pennies. And Layer 2s deliver that. Big money follows ecosystems, not tokens. Here's another key insight. Big money doesn't fall in love with tokens. They study ecosystems. They ask, who's building here? Who's funding it? Who's using it? Who's partnering with it? Strong ecosystems attract more capital. Weak ones fade. This is why developer activity matters more than price. Data, oracles, and the plumbing of crypto. Now let's talk about something most retail investors ignore. Crypto plumbing. This includes oracles, data feeds, cross-chain messaging, identity systems. These are boring, but absolutely essential. Why oracles matter? Blockchains can't access real-world data by themselves. They need oracles. Prices, interest rates, weather data, market feeds. Without oracles, DeFi doesn't work. RWAs don't work. Institutions don't work. So, guess where capital flows? To the pipes. Not the paint. Stablecoins, the most used crypto product. This part surprises people. The most successful crypto product isn't Bitcoin. It isn't NFTs. It's stablecoins. Trillions in volume. Millions of users. Used every day. Big money understands this. Stablecoins are digital dollars. And dollars run the world. Why stablecoins are a big deal? They allow instant global transfers, dollar access without banks, 24/7 settlement. Corporations use them. Funds use them. Governments are watching them. Stablecoins are the bridge between old money and new rails. Institutional DeFi is coming. DeFi isn't dead. It's evolving. Retail DeFi was experimental. Institutional DeFi is structured, compliant, permissioned, risk managed. Big money wants yield, but they want it safely. That's why private DeFi pools, regulated protocols, KYC-enabled platforms are quietly growing. Not loudly, quietly. I plus crypto, but not the way you think. AI hype is loud. Big money ignores hype. They focus on utility. Crypto plus AI isn't about chatbots. It's about data verification, compute marketplaces, decentralized storage, model integrity. I needs data. Crypto secures data. That's where the real intersection lives. What big money is not doing this is important. Big money is not chasing meme coins, day trading pumps, rotating narratives weekly. That's retail behavior. Big money accumulates during boredom. When prices move sideways. When no one cares. That's when positions are built. The timing most people miss. Retail buys excitement. Institutions buy uncertainty. When prices are flat, sentiment is neutral, volume is low, that's accumulation time. By the time retail notices, big money is already up. How to think like big money without being rich? You don't need millions to think smart. You need patience. Ask better questions. What problem does this solve? Who actually needs this? Will this exist in 5 years? If the answer is unclear, move on. Clarity attracts capital. Long-term winners are built, not pumped. Every cycle teaches the same lesson. The biggest winners were boring early. Bitcoin was boring. Ethereum was boring. Stablecoins were boring. Until they weren't. Big money doesn't fear boring. They embrace it. Why most people will still miss this? Because this requires patience, research, ignoring noise. Most people want fast money. Big money wants durable money. Different mindset. Different outcome. The biggest signal big money leaves behind here is something most people never look at. Big money leaves signals, not tweets. They don't announce buys. They don't hype narratives. They don't chase attention. They leave trails in partnerships, regulatory approvals, enterprise pilots, developer growth, long-term funding rounds. When you see institutions testing quietly, when builders keep building during boredom, when capital keeps flowing with no hype, that's your signal. Big money doesn't need permission from the crowd. They move first. They move silently. And they let time do the work. If you learn to watch where effort and money keep showing up, instead of where excitement spikes, you stop reacting. And you start positioning. Right now, the loudest parts of crypto are distractions. The real moves are quiet. Infrastructure. RWAs. Scaling. Data. Stablecoins. This is where big money is moving. Not because it's exciting, but because it works. If you follow hype, you follow crowds. If you follow infrastructure, you follow capital. And capital leaves footprints. You just have to know where to look.